5 tips to negotiate the lowest interest rates possible on credit cards, credit lines, and loans. We're about to dive in and decode all 5 right now. And these 5 are going to give you the special recipe you need from an insider's perspective on getting approved for the most money for your business. I'm going to give you 5 of the best tips to get the lowest interest rates. We got a lot to cover, so let's dive in. So look, I'm sure when you get money, you want to pay as low of interest as possible, right? You want to pay as little fees, as low as interest as possible, so that way you can get the most amount of money, paying the bank, lender, credit issuer the least amount of money in return. Well, here's what you need to know. Look, there's a formula to do this. In order to do it, we have to get in the lender's head, see what they're looking for, and paint the exact picture they want. And when we do this, we save thousands or even tens of thousands of dollars on unnecessary fees and interest. We're able to get more money because we can afford it, because the lower rates give us longer terms and lower payments. And that's what we want. We want longer terms. We want lower interest, so we get lower payments so we can borrow more money, have our payments low, and have more money to grow our business even faster. So let's dive into these 5 tips right now. So my very first tip is you need to know the kind of product that you actually need to get money. What I mean by that is there's a lot of funding products out there, loans, credit lines, credit cards. You need to know the one that works best for you. So the easiest way to do this is what I call the 3 C's cash acquisition formula. There's 3 main things that lenders want to see: cash flow, credit, and collateral. Now, if you have all 3 of these, really good consumer and business credit, you've got consistent cash flow and tax returns, you've got collateral, well, then you can get SBA loans, you can get term loans, you can get the best loans that exist today. But a lot of times you might not have all 3 of these, and that's when you want to figure out where your strength is. Do you have good consumer credit? Or do you have regular, consistent cash flow? Or do you have some kind of asset that can be served up as collateral? Inventory, equipment, real estate, for example, stocks, bonds, 401ks, IRAs. If you have an asset that serves up as collateral, you want to look at collateral-based financing. If you have good, consistent cash flow and bank statements that verify that for 6 months, you want to look at cash flow financing. And if you have good consumer credit, you want to look at a program called Credit Line Hybrid, where you can get up to $150,000 in financing, even as a new business, just because you or a guarantor, someone around you, has good consumer credit. Now, if you have none of these, that's when you want to build business credit, and we'll talk about that as we get into these future tips. But tip 1, you have to have an idea of the type of product you're looking at, and you need to figure that out based on your business strengths by looking at which one of these C's you have, or maybe you have all 3 of the C's, which sets you up perfectly for the best kind of financing. Next, tip 2, you got to find the right lender. Now that we know the type of financing we need, now we need to find the right lender for us. And what I mean by that is the right lender for me is not the same lender for you. Different lenders like different types of businesses. So how long you've been in business for, the actual industry you're in, what you actually sell, product and service-wise, how is your consumer credit? All these type of factors tie in to the type of lender that might be the best for you. For example, let's say you're in the pot industry. You're actually in the marijuana industry. Well, there's a lot of lenders that won't do anything with that industry, but those other lenders, that's their exact specialty. Let's say you're in financial services. Well, that's not the preferred type of industry for a lot of banks, SBA loans, conventional banks, but there's other kind of financing that loves to work with the actual financing industry sector. So you need to find the right lender once you find the right program. So for example, if you're dealing with revenue lending, you have consistent cash flow. Well, there's thousands of lenders that lend in that industry. Now that we know we're looking for a cash flow lender, now it's easier for us to find one that works for our time in business and our industry and our credit risk. So once we know the kind of program, next, we want to work with the source, and oftentimes brokers can help with this. Like Credit Suite can help you with a free finance assessment at creditsuite.com/get funding, or plenty of other brokers out there may help you find the right lender, but you want to find the right program first, then we want to find the right lender to lend to you and your specific situation. Tip 3, you want to shop around a little. Find at least 2 or 3 lenders and check offers from all of them. Look, more than likely, the one lender you check with is not going to be the one that's going to give you the best offer. So once you find the right program and you then find the right lenders, the next thing you want to do is apply for 2 or 3 so you actually have terms to compare. As a matter of fact, this gives you more leverage because you can actually take the terms you got from one and use them to negotiate with another. This is key to get get you the most money. I'll give you an example. I once got approved for a Bank of America credit line. And when Bank of America called me, it was a pretty high credit line. It was like $100,000. I said, I'm not even interested. I have one with PNC Bank that's way higher. They asked me how much the one for PNC was and how much I wanted. I told them that, and they nearly doubled my approval just because they wanted to be competitive with what I already have. This is what having options will do for you in your business. So make sure you know the right program, you know the right lenders, and then get a few different offers so that way you can use them as leverage to negotiate the best terms. Now that brings me to tip number 4. If you want to get the best terms, you need to make sure your business is structured the right way. We call this fundability. And fundability is the secret formula lenders and credit issuers look at to see just how legitimate and credible your business is. So if we look at setting up a fundable foundation for our business, we want to choose entities like an LLC or a corporation. We want to have an EIN number for our business. We want to have a separate address for our business that's not our home address and it's not an actual mailbox or PO box. We want to have a separate phone number for our business that's not our mobile phone and that's not a home phone. We want to make sure we have any licenses that we can get for our business. We want to make sure we have a business bank account. We want to make sure we have a business merchant account set up for our business as well. All of these things go a long way to showing that our business is legitimate and credible, that our business can stand on its own. And by doing that helps lenders want to lend money to us. We flip the script. We're not chasing down lenders, begging them to give us money. They want to lend us money because we now meet their basic criteria. So now we know the right program. Now we know the right lender. Now we've got multiple approvals, and we're getting those approvals because we've set up this strong, fundable foundation. And that brings me to tip 5. And tip 5 is that we want to make sure we build business credit. Look, business credit is as important to you getting money for your business at good terms as consumer credit is. If you're trying to get an auto loan for you as an individual, if you're trying to get a home mortgage, if you're trying to get a credit card, a personal credit card, or a signature loan, it's really hard to do if your credit score is horrible and everybody you've paid, you've defaulted on, and your credit scores are in the toilet as a result, right? Well, the same thing is applicable for your business. As a matter of fact, you can have failing business credit scores even when you have nothing reported to the reporting agencies. That's right. You're seen as high risk just because you have no business credit established. So you want to build business credit with Dun & Bradstreet, Equifax, Experian, because business credit directly controls 3 things when it comes to getting financing. 1, will you get approved or will you get denied? So if we want to get more approvals, we got to build business credit. 2, what kind of terms are we going to get? What kind of interest rate are we going to pay? How long of a term are we going to get? Remember, the longer term we get to pay back the loan, the lower the interest rate, the lower our payments are. And the third thing that lenders will determine using business credit is how much money we get. So if we want to get the highest approvals, we need to build business credit because it helps us get approved for more money at better terms. And even though that is tip 5, it's the most important of the 5 tips. Now, if you've done these 5 things correctly, we set up our business where it's fundable. Then we built business credit and established a good reputation with lenders and credit issuers showing that we're responsible and our business pays back its debts on time or early. Now we're coming in and we're using this as leverage to come in and find the right funding program that works for us based on the 3 C's, then finding multiple lenders who will help us, getting multiple approvals, and using those as leverage to negotiate the best interest rates. Pretty effective strategy, right? So this is exactly what you need to do to get the most money for your business. By the way, if you want to know the types of financing that are available for you, click the link in the description of this video. There you're able to get our guide on 27 different ways to get money for your business, and give us a call for a free finance assessment. On this finance assessment, we'll tell you all the financing you can qualify for now. We'll even do a fundability check to tell you what you need to fix with fundability, and a business credit review for you where we look at your business credit reports, even help you get them at no cost, and give you tips and tactics to build your business credit. This will set you up perfectly to get the most money to grow your business at the lowest interest rates. So did you get value from this training? If so, make sure you like and subscribe. And on YouTube, make sure that you turn on notifications and you get notified when we release more training like this that helps you get more money at better terms. And you'll get notified when we go live, where we have all kinds of training where we're not only live, but we're answering your questions and your funding scenarios live as well. So make sure you like, subscribe, and turn on notifications, and look forward to our next training where we talk about more cool ways to get the money you need to start and grow your business.